I now request Sucheta, our trustee, to welcome Mr. Kamath with flowers as well as a memento. Apart from Mr. Kamath, we have with us today two other experts in the field as discussants in the panel. They have both decades of experience in the financial world and a very deep personal interest in the subject. Let me take this opportunity to welcome Mr. Advocate Joby Matthew by requesting Yogesh Sapkale, our deputy editor, to welcome with flowers and also a memento. We are also delighted to welcome Mr. Harsh Rungta, personal finance expert, a former banker. I request my colleague and marketing head, Mr. Shashi Kumar, to come and greet him with flowers and a memento. Turn around. Our program today is a very simple one. After a very brief presentation of the key findings by Sucheta and the release of the report subsequently, we move straight to a discussion on the subject. It's now my privilege to give you a formal introduction to our speakers. We are honored to have Mr. K.V. Kamath, a distinguished leader whose name is synonymous with innovation and transformation in the banking industry. He began his illustrious career in 1971 at ICICI, where he played a pivotal role in its evolution. After spending several years in Southeast Asia with the Asian Development Bank, Mr. Kamath returned to ICICI as its managing director and CEO in 1996. Under his visionary leadership, ICICI transformed itself into a development finance institution, from a development finance institution to a diversified, technology-driven financial services group with a global presence across banking, insurance, and asset management. Mr. Kamath retired as the MD and CEO of the bank in 2009, but continued to serve as the chairman until 2015. He has also served as the chairman of Infosys and was appointed as the first president of the new development bank set up by the BRICS countries in 2015, a position he held till 2020. Currently, Mr. Kamath is the chairman of National Bank for Financing Infrastructure Development and the non-executive chairman of Geo Financial Services. A mechanical engineer by training, Mr. Kamath also holds a postgraduate degree in business administration from the prestigious Indian Institute of Management, Ahmedabad. His contributions to the banking and financial sectors have been widely recognized, and in 2008, he was awarded the Padma Bhushan, one of India's highest civilian honors. We are truly honored to have Mr. Kamath with us today to launch this important report. His insights and vast experience will undoubtedly add immense value to the discussions that follow. Advocate Joby Matthew is a leading securities lawyer based in Mumbai and founder of Joby Matthew and Associates. He has a vast experience in securities law, having worked with SEBI, that is Securities and Exchange Board of India, where he was instrumental in drafting several critical regulations. Prior to joining SEBI, Advocate Matthew practiced at the Kerala High Court and also worked with the South Indian Bank as a legal officer. His experience includes working with J. Sagar Associates, one of India's prestigious law firms, where he played a significant role in conducting due diligence for public offerings and private equity investments. Advocate Matthew brings a wealth of experience in corporate advisory, litigation, commercial and arbitration matters, SEBI legal compliance, and much more. His expertise in navigating the complexities of the legal landscape, particularly in the securities market, has made him a trusted advisor for India's leading broking companies, financial institutions, and investors. We are fortunate to have his legal acumen and deep understanding of the regulatory framework contributing to our discussion today. Next, it's my pleasure to introduce another distinguished panelist, Mr. Harsh Rungta. Mr. Rungta is a chartered accountant by qualification who has had an exemplary career, particularly in the realm of retail finance. He began his journey in ICICI, where he was a key member of the senior management team responsible for setting up of ICICI's retail lending business in 1998. He left his position at ICICI to start off an entrepreneurial journey by setting up a retail finance marketplace, initially with Apna Loan and then apnapaisa.com. Currently, Mr. Rungta is the founder and principal officer of Fee Only Investment Advisors LLP, a SEBI-registered investment advisory firm. He is also a director and former chairperson of the Association of Registered Investment Advisors, a non-profit organization dedicated to promoting investor interests and elevating the standards of investment advisory profession. Additionally, he serves on the governing council of Sahmati, advocating for the adoption of account aggregator framework, and is a member of SEBI's Alternative Investment Policy Advisory Committee. A well-known personal finance expert, Mr. Rungta writes a column in Business Standard, Truth Be Told, and is the author of The Complete Home Loan Guide. His vast experience in personal finance, investment advisory, and his deep commitment to improving the financial ecosystem in India make him an invaluable addition to today's panel. So we will be releasing the report right now, and for that, may I also request the co-authors of this study, Mr. Akshay Nayak, who is a project director of Moneylife Foundation, and Mr. Abhay Datar, a retired banker, consumer activist, and counselor for Moneylife Foundation on banking, insurance, and consumer-related matters, to join us here on the stage. May I now request Mr. Kamath to kindly do the honor of releasing the report. Isn't there another copy there? I now request Sucheta to come and make her presentation. Thank you.
Good evening, everybody, and welcome. The study we are releasing today, which is Challenges in Transmission of Assets to Nominees and Legal Heirs, put together by me, Mr. Abhay Datar, former banker and consumer activist, and my colleague Akshay Nayak, covers a giant problem that has festered for over 25 years, frankly, with no resolution in sight. So I'm going to run through a very quick presentation because I'm sure you want to hear the discussion. But this presentation will give you the scope of what our study is and provide you some perspective for the discussion that follows. Before that, I just wanted to mention, I'm sure each of you want a copy of the report. So, you know, in the modern world, we give it to you on your phone. So if you are a member of Moneylife and you're part of our WhatsApp and Telegram groups, you will get it before you go out on your phone. If you're not, here's the number on top there. If you can send a message on that number, then before you leave, you will have the report with you, right? You can read that number, or you want me to read it out? Can, right? Okay, so I'm now going to run through this report and my presentation, Challenges in Transmission of Assets to Legal Heirs and Nominees. It's a problem that each of us encounters. Now, look at the amount. Okay, India's unclaimed fund position, we have said, is 2 lakh crore. That sounds a humongous sum, but believe it or not, since the time we've been working on this study, right until yesterday, the number is only growing. So 2 lakh crore is a conservative estimate. And humongous sums of money belonging to ordinary investors. People like you and me, most of it we think is tax-paid money because this is money that's lying in fixed deposits, bank deposits, bonds, shares, provident fund, mutual fund, insurance. I mean, all of us put our extra money, our savings over there. So in all probability, it is money on which we have already paid very high taxes. The government processes to claim this money are so difficult that it has accumulated because either people don't know it's there or it is very, very difficult to access it. And our study is about the difficulties that people have faced. Now, you'd wonder where this 2 lakh crore, how is it split up? About 25,000 crore is estimated to be in the insurance sector. First of all, I must tell you that the government does not put out reliable data in most sectors. So some of it is reliable, some of it is not. So wherever you see an asterisk, it's an estimate. So insurance is 25,000 crore, maybe a conservative figure. Mutual funds is 35,000 crore. Bank deposits is a pakka figure because the Reserve Bank of India has said that 78,213 crore after being in dormant accounts for 10 years has been transferred to the Depositor Education and Awareness Fund as of March 2023. And we have, you'll see details in the study, we have done a further study which says that at least 1 lakh crore, and this does not include SBI, so without including SBI and one more bank, at least 1 lakh crore is on the way to DEF because it is lying in dormant accounts, and money lies in dormant accounts for 10 years before it gets transferred to DEF. Now, shares and dividends go to the Investor Education and Protection Fund. That amount we had estimated at 68,800 crore based on sites like Recovery, but I'm going to show you that that is again a conservative estimate. EPFO, Bank Bazaar estimates at 27,000 crore. This number is growing at 15 to 20% annually. Like I said, the bombshell 2 days ago was released by Mr. Rs2. He put together all the shares that are listed in IEPF and what is their value. And look at the number that he's come up with. It's stunning. 1,561 companies. The amount is 82,199 crore current value. And this is again not the whole figure because the government has admitted another 5,000 crore which is in interest and dividends and whatever. So the total number will be 88,000 crore in shares and equity and corporate benefits alone. Where is the money? Like I said, equity dividends in IEPF, bank deposits in the Depositor Education Fund. Insurance money goes to the Ministry of Social Welfare in the Senior Citizens Welfare Fund. In fact, that's why I requested many of our NGO friends who work with senior citizens, because there are a few things in the study that would be of interest to them. And mutual funds so far remain with the mutual funds. SEBI has some restrictions on what they can do with it, but that is not even transferred because I guess it's still too young and it is going to happen. So why is the money unclaimed? One reason, forgotten investments for various reasons. Sudden death, people have not told families. Then lack of information among claimants and legal heirs and even family members. Or many a times there are family fights which go on for decades because court cases don't end and money gets transferred after 7 years or 10 years, but court cases can take 20 to 25 years. Lack of information is a big reason, and a lot of people you would notice get calls from agents saying that your name has turned up in IEPF, your father held shares. Some of them are in lakhs, some are in thousands, but this is happening to most people, right? The biggest issue is difficulties faced in recovering this money. So a big chunk of our study is focused on that and what can be done to make things easier, as well as the whole process of probate, succession certificates, inheritance certificates. The fact that officials who are supposed to deal with it have no idea what has to be done. So what is the action taken so far? Things are not so bad. They have improved over the last 2 years. One reason is that I filed a public interest litigation in the Supreme Court. Senior counsel Prashant Bhushan helped me. The court was kind enough on the first day to say that it's an important issue and sent notices, after which RBI has come forward and set up the gateway to access information. It's called Udgam. So we had asked for a centralized database across assets, but regulators don't want to give up money once it comes to them. So RBI said we will set up our own database, but at least they accepted the fact that we will make it searchable. Whether it is truly searchable or not will be a matter of further discussion. But progress that you have Udgam, all banks and names are listed over there. SEBI has by far the best initiative, okay? They have done a lot of work and we're quite appreciative. Again, Mr. Rungta deals with them. He'll say there are teething issues. I'm sure many of you will find that also. But in terms of putting detailed SOPs, clear forms, putting it out, SEBI has gone a long way, including creating a death registry. Lots of people used to be hassled by RTAs. SEBI has now said what an RTA can do and can't do. So we quite appreciate it. If there are teething problems, they need to be fixed. It will happen. EPFO and IRDAI also, following the court case, has come forward and said, we have online systems. IEPF also claims it. But those who use these systems know that the claims are far more than what it is. But they are, at least thought process wise, they are online. And in principle, they agree that you should be able to handle it and resolve your issues and get your money through an online process. The process is not very workable just now, needs a lot of work, but we have made progress. So what are the challenges that continue? Inconsistent processes for nomination, lack of SOPs, especially with banks. And we have been pleading with the RBI for a long time. We made a presentation to the Kanungo committee. For some reason, the RBI will not do the SOPs themselves like SEBI has done. They pass on the responsibility to the IBA and it doesn't happen. Then there's a high level of distrust because everyone's worried that people will commit fraud, which is why they ask for multiple proofs. So they want indemnity bonds, they want sureties. If you have a probate also, they may ask you for a succession certificate. A lot of that has come out in the survey that we did. There are serious gaps in the legal process also. And one of the things, again, which we will spend less time on today, but it's part of the study, is issues like what happens to you if you have money in the bank, you have plenty of savings, but you become incapacitated, you know, either due to dementia, maybe Parkinson, maybe you're in a coma or incapacitated in some way. There is no thought of what happens to take care of you with your own money. And this is something that we've been advised will probably need a separate legislation, and it's something that we will probably discuss at length with the right groups later on. So what happens around the world? I'm sure that comes to your mind that this can't be an Indian problem. It's a problem that happens globally. In most developed countries, there is an intent and a recognition that the government has a duty to reunite unclaimed property with its rightful owner. So in America, states have central databases. There are some countries which have a central database, and there is always still money after all the processes that never gets claimed, okay, for whatever reason. Maybe someone has no heir, whatever. So there will be a certain amount of money that still remains, which eventually is used for social work and for good causes. But every country has the problem, has resolved it, and the focus is not to be proud of the fact that it's growing at 15 to 20%, but to reduce it and return it. And we want Indian regulators and the government to understand that this has to be the thought process. In America, they go so far as to look at even if you've not got your last salary because your last company is not paying you, the government intervenes to ensure tax refunds, salaries paid, all that comes under unclaimed money, which you are reunited with, right? So what are we talking about? We want a centralized database, one unified platform. Today there are multiple databases. EPFO has its own, IEPF has its own, RBI has its own. We think for an individual to fight 5 or 6 times is really putting a lot of hardship on claimants. A centralized database takes care of it. In order not to have repeated KYC and repeated proofs, we want central repository of death registration. It's an idea we frankly borrowed from SEBI. If SEBI is doing it for the capital market, why not expand it to everybody? It's a good idea. It's there. So we hope that the government will adopt it across. I mean, why not for property as well? Then we want clear SOPs, very detailed, like SEBI has done, put out forms so that officials down the line are not using their brains. They are also not worried that they'll lose their job because they've given you. They follow a standard official process and they get the right documents. They should be in the clear. There are some legal reforms that are required. For instance, we don't understand why 3 cities in this country need a probate. Okay? The 3 presidency towns, it's 77 years after independence, we have a British era thing. Nobody wants to talk about getting rid of it. You have a new criminal code, but this continues because problems that middle class people face is nobody's problem. We are not a vote bank, so this British era law will continue. You know that it costs you 75,000 to 80,000 as fees. Long process, sometimes 2 or 3 years, if there is a dispute, even longer, just to get a probate. Succession certificates are also expensive, but I don't see why all this cannot be simplified and made faster. The advantage of a centralized solution, you have a unified platform, consolidates all finances, you get a single snapshot at one place of whether you're owed anything from different people, and you can make the claims in one place. You have technology to play the role of integrating everything. You have to leverage fintech solutions. And the expected impact, of course, is people are happier. They get their money. There is more transparency. There is faster claims processing and a significant reduction in unclaimed assets. So this is the number. If you want this report, so please WhatsApp us and you will get it. And we now move on to the next stage, which is the discussion. And like Devashish said, Mr. Kamath insisted that he doesn't want to do a keynote. He would rather have a discussion. And so we're going to start and discuss this issue. So, Mr. Kamath, thank you so much for launching our study. Though you wanted a discussion, we're going to start the discussion with you. So I want to ask you to, make a few observations that you may have on what we have said so far, and then, of course, participate in the discussion.
Thank you. Thank you, Ms. Zellal. And let me compliment the authors. This report is an outstanding report. I have gone through it in detail. And what struck me is that every step that they have brought out, the challenges that they have brought out is correct, because some of these I have faced myself, so I can relate to this. And what struck me is that I think that I am an informed person and keep track of things and so on. So if I could, would have overlooked or not done something and not taken the steps to claim something which is lying in, say, one of these devices, I can only then imagine the challenge that somebody without, probably living in a smaller town, without the access that we in urban areas have, and without maybe technology and so on, what it would have taken. And the time to claim that took me from, with handholding, and I will specify that, took more than a year to get what was locked up out. So you can only imagine, after the process is started, first you get the first hurdle of knowing that there is something which is due to you. That is the first step. That could be several years before you get to know that. The second step is then you start at all intent and take all the steps prescribed. That itself took 1 year for me. It could take many more years for somebody else. So that struck me as to something we need to get something to done to at least get this in the public to the public attention. And prior to this, some time back, we said maybe we should get it to the regulators' attention. And Harsh and another colleague, I think, took the initiative a couple of years back to bring it broadly to the regulators' attention. And thereafter, we did see traction on the regulators' side, I must admit. But This report has brought it out in a very methodical, step-by-step process, what actually you face. And gives to me a framework on which regulators can act, the government can act. So it's not just a report of findings, but it's also a report of what I would use the phrase implementable suggestions. And I will leave it to our two panelists, Jacob and Harsh, to push it further. But I will only say this, that in today's, the way we are connected today, and with probably every common person also being able to get on a device and do an UPI transaction, I think all the things that we want to do by through this process could be done leveraging technology. And that's going to happen. And as we start chatting, I'm sure we will bring out some thoughts on what it could do. And in fact, ma'am, you mentioned the issue of probate. Yes, in the presidency towns, I would think if your nomination process is tight now, and it's getting tighter, and you have technology interwoven, I would say that the process has to be automatic. So the will is only then a fallback of the last resort. And if somebody doesn't want to nominate, then yes, he may have a will. But why a probate? Still, I would think that is probably something that we need to now, make the issues there brought to. But I think this takes the whole platform in terms of agenda much of awareness much forward. I think we should all next also talk about how to take it even further. Thank you. I'll stop here and then come in.
It's an important point that you mentioned. I'm going to start with the last point first, which you talked about probate, and and nomination should be equal to a will. So I think it's a subject that leads to heated debate. I was very surprised when a very respected judge told me, "Why do you need wills at all?" And Jovi Matthew will tell you, and Rekha Kurola, his wife, that you must make a will. And constantly, we have been, for the last 14 years of Moneylife, we have told everybody you must make a will. So it was such a radical thought. I know that Mr. Harsh Rungta also believes, why do you need a will if you can get nomination? And there are very strong views. So I'm going to start with Mr. Rungta because he agrees with you that nomination should be made good enough, and that Mr. Matthew, who says, no, there are serious issues. I think people need to hear both sides.
No, let me just clarify. As of today, there is no choice but to make a will. Okay, nominees are only trustees, except possibly for life insurance. We don't really know. It's not been tested. I will interject here. Yes, sir.
Nominees are trustees because there is a requirement of a will where it can override it.
Yes, sir.
But if you go to the earlier statement that you made, if there is no will, then nominations will work. Unless I will hear. So I am eager to hear all sides.
No, so sir, as of now, that is the position. My point was that even when we talk of a will, we have been accustomed, just like probate is a thing that harks back to 77 years back. We have been accustomed to saying the will should be of all assets together. What is nomination? If you are a properly declared asset by asset successor, if I can have a will asset by asset, right? That I think, yeah, and if that is allowed legally. I mean, if that has to have the force of law. Currently, it does not, right? So let us recognize that. So today, when we talk to clients, we'll make sure that they have their will. I have written my will. I mean, that is without question. What we are talking about is what we should advocate. My point is, people have this strange aversion to writing wills, because I mean, you get all kinds of excuses for people not to write wills. People don't have that aversion when they do asset-wise nomination. So I'm saying, if we can convert that mental acceptance of doing asset-wise nomination through some legal changes, if we can convert that into a will, it will be asset-wise, right? While at the same time somebody wants to make a full-scale will, let that supersede a asset-wise will, but allow a asset-wise will. That was the only point.
Um, yeah, it's on. It's on. So yes, I mean, let me address this one point that Mr. Rungta said about the hesitancy to write a will. We actually got one of our friends who was a psychologist to sort of try and understand why people are having this problem. One, of course, is the morbidity. I mean, you don't want to face the fact of your own death or the possibility of your own death. But there's a very interesting statement that I read somewhere, that a will is also a way in which you control your assets after your death. So, you try to become immortal. You immortalize yourself. So that's a very interesting thought, I thought, because at the end of the day, you prescribe that, look, this piece of land should go to this son, that jewelry should go to this daughter, the saris will remain with my wife. So at the end of the day, after death, you're still trying to control what is happening to your assets. Whereas, well, karma, whatever philosophy is that all of this is, you're freed of all of this after death. But there's also another point, and that's really the history of wills. I was learning about wills in college. So wills really originated in the UK and in the English law. And wills were really a way to get property out of the hands of the church, because they had these ecclesiastical judicial systems where the church would take anything because it belonged to God and therefore it belonged to the king. They would take out anything in which there was no will. So people used to write wills to ensure that their property was saved from this. But we, of course, don't have that, thankfully, at the end of the day. But that probably is also one of the reasons why an Englishman would write a will and we would then hesitate to write a will. The English have a very evolved system of doing that. They have a central will registry. In fact, that's one of the things that we found, where your wills are recorded, wills are registered, and if you pass away without, a legal heir, then there's a very organized system of how the state gets the property, etc. But to come back to what Mr. Rungta said and Mr. Kamath also had suggested, can nomination replace the will? Yes, in financial assets, yes. But in terms of other assets, like for instance real estate, where the movement of title or the transfer of title is a lot more complex than something that you simply write, there one may have to be a little more careful about how assets transmit due to the death or after death. Because verification, disputes, these are factors that then contribute to how the transmission process can be more complex or not. Record keeping is another aspect, because in a financial asset, whether it's a bank deposit, whether it's insurance policy, or whether it's a security asset like a share or a bond or whatever, record keeping is very well done. But on the other hand, now you have, for instance, gold ornaments. Now you buy them, you don't always keep their receipts. So record keeping in respect of those may not be pakka. So there a will contributes to a large extent in ensuring that proper distribution of assets. Some of these challenges are there, but therefore unless there's a comprehensive way of, let me put it this way, validating the transfer instrument or the asset being transferred, it's still too early for nominations to replace wills completely.
What about what Mr. Rungta says, that are there legal changes that you can put in place to give a little more weight and sanctity to nominations?
Nominations, see, at the end of the, now Supreme Court has interpreted or declared that a nominee is a trustee. But at the end of the day, now the trustee can also be the legal heir. So, at the end of the day, it all depends on who gets the title, really. So if a bank deposit is to go to the son or to the daughter or to the daughter-in-law or to the grandchild. Now, by making the nomination, you're really telling the world that, look, this is the person to whom I would like this asset to pass after my death. That's exactly what you do in a will. So in that respect, there's nothing wrong, nothing different. But the question is, again, that's the question about probate, and therefore the presidency town argument. British era thing, there were 3 presidency towns, chartered high courts, they were given the powers to probate the will. Probating the will is nothing but getting the seal of approval of the court and saying that, look, this will is properly done, you've got the force of law. Nothing more than that. But the process takes a long time, and people try to take shortcuts by getting a succession certificate or a legal heirship certificate or things like that, putting a advertisement in a newspaper. It doesn't really substitute it. But nevertheless, if the law were to be amended, now the Uniform Civil Code, with all the controversies that it has, I think there's an excellent opportunity for doing this, because it sort of tries to ensure that all issues relating to personal law, whether it be marriage, whether it be succession, are addressed in one single code. And that's a good opportunity, because if that can then provide that, look, you give a nomination that amounts to a certification of the succession part, that will be a brilliant idea.
So I have one more point on nominations before we close this part of it, which is that if you make nominations stronger, then the person who's making the nominations has to do it very, very thoughtfully and with an awareness that his own life may change. So a person is married today, he may get divorced, he may have, he may get remarried. So you have to be, people are very careless about finances, they have to be very up to date. There's also a challenge about how people think. So we've been doing seminars now for 14 years, we've been discussing wills, and we have all kinds of cases come up. So most of you know that by and large, it is women who outlive men, right? But there are many men who think that their wives are incapable of handling finances. And so the nominations are either the children without providing for the wife, and we have had bizarre cases where even a business partner has been made a nominee because they think that they can trust him and he's going to look after the family, and it has not happened, right? So if you then do not go by succession laws, which are a form of protection, because under the succession law you can challenge and you say the nominee gets it. There's such a danger when the person who's nominating has been careless or thoughtless. Is this something that either of you would want to comment on or give us a comment?
I think the challenges remain the same whether it is nomination or wills. You have to do it carefully, and if circumstances change, you need to change it.
No, if it's intestate, it goes by succession.
True, it goes by succession. So if, as long as, like we tell in our planning practice, as long as you make your choices consciously, you can take a conscious choice that I do not want to choose. I let it go by succession, and it will cause issues to because for getting that intestate succession, there is a certain process they will have to go by. Versus, like it is happening in movable assets, okay, effectively possession being 9/10 of law, because of nomination, the asset goes to the intended nominee. Yes, he or she is holding it as a trustee, but they can do with it what they want. Yes, they are accountable to the legal heirs, but for the legal heirs to get the nominee to be accountable, they have to go to the courts, and we know what courts are. So for all intents and purposes, effectively, nomination has become equal to succession in movable assets. The only problem is in immovable assets, which is where I am saying, make that nomination is happening today in immovable assets, especially if it is a cooperative society, a flat in a cooperative society. But there the Societies Act provides that you cannot transfer it, the nominee cannot transfer it, cannot create third party rights, etc. In fact, so much jugaad is happening. Societies are not aware of this law. Buyers of flats are not available. The nominees are not, they don't know. You have chains of such flats being sold. God alone knows when the issue will come up. Even in other places, lots of places, just based on a registered will, flats are, properties, immovable properties are getting transferred based on a registered will. Nothing else, no other court process. Some other process, but no other court process. So my point is, jugaad is already, we are a land of jugads. So, jugaad is already going around this. Will nobody writes. Let us recognize that. Let me ask here, how many people in the room have written a will? That's good. I mean, this is still, yeah, it's and that's still only 35%, right? Okay. And if I had asked this question 5 years ago, probably my own hand wouldn't have gone up. Although I wrote my will 20 years ago. So my point is, nobody writes a will for whatever reason. And therefore we need to sort of do something to ensure that this huge problem of assets does not get bigger. That's my limited point.
Harsh, if I may just, if I look back the process, I think there are two parts to it. One is writing a will, you are putting down your assets. And secondly, you are nominating who will get what. Now, if you look back in time, both these processes had to be done by writing it down, because there were no records available of it. This is part of the problem for the first part of it, the IEPF shares and all, because there is no record. In today's world, at least as you rightly said, the financial part of it, all the financial assets, I think we are now one step away from putting it in one place. Today, mutual fund central accumulates, gets you all your bank accounts. We can search under a single. We can get that. It's only insurance now which is not. Mutual funds, of course. So it's only insurance which has to be brought in now, and then the financial side of it is taken care of, except for any cash that you may have, and gold that you may have. So I think these may have to be addressed. But then comes the things like property. There again, if you look at it, the evolution over the last 10-15 years, because land records were not digitized. So there was no other way that you could approach it. So who is the arbiter? And now, once it is digitized, if we try to apply the same mindset that was there earlier, that's where I think we will create more problems. Now, you mentioned the problem of societies. This is an unbelievable problem. Nobody understands the society's the laws under which this is operating and what is happening. So finally they say that you get a probate. And even after a probate, the process is not very clear. So there is a whole lot of self-education that is required by people who are administering. And given that technology has evolved to a place, to a certain, to a level where it is today, and the common man is able to access things, I think we need to slowly push this envelope for the good of ourselves, the common person, that this can be made as easy as possible finally. We started, the first slide that was put up was very important. That is unclaimed dividends. In today's world, or unclaimed shares. In today's world, this has no place. Everything should be searchable and claimable. So start from there and then you get down to land records. I think there is a solution available, but I entirely accept it's not today. So you will need a transitionary path, and you may still need a will for a different purpose.
Actually, nominations sort of are in a way more efficient wills, because
That's working. That's working.
Okay, sorry. So, because nominations may be more efficient wills, because at the end of the day, a will as an executor, will as a testator who actually executes it, an executor who will carry it out, a beneficiary who will get the benefit, and two witnesses. Now, if you see a nomination in a bank, really you execute the nomination, so you're the testator really. The bank carries out your instructions, so the bank is the executor. And the bank manager or the official who signs it is the witness. So you really have all those components there. The only thing is that for a different asset class, like Mr. Kamath mentioned about real estate, the record keeping may not be that efficient. But once the record keeping is efficient, then it's a far more easier process to do it. Maybe we'll reach there one day.
Correct. So, as Mr. Kamath said, we've come a long way. We've got the building blocks in place, right? So, but the problem has grown. So, in 1998, IEPF was first set up with an amendment to the Companies Act. And I was one of the people on the IEPF committee. And I remember the first year about 380 crore was transferred by companies. We thought it was a big sum. Then it increased to 1,000 and we thought it was a humongous sum. Today it's 88,000 crore 25 years later, right? So you cannot have this problem growing at 15-20%. It has to be reduced. And even at that time, I kept saying that don't talk about how you'll spend the money. First, Government of India said, give us that money, it has to go to the consolidated fund, right? Then people had to go to court to fight for their rights, saying that we are aware of this money, court cases take longer than 7 years, you can't deny us the right to get our money back after the court case is decided. So it's been a slow process over 25 years to even establish your rights, right? But I think with all the technology and the building blocks, you have to reduce this number. So if we put, say, a 2 lakh crore as a number of shame for the government and say the challenge has to be that you have to bring it down by 15 to 20% every year. So it did work, okay? We put a lot of pressure. So if you remember, RBI did this 100-day challenge of trying to find the owners of unclaimed assets. They don't talk about how successful it was because it probably wasn't very successful. But at least it went to their mind to do something. So what is the solution? According to me, SEBI has made the first step by at least agreeing that detailed processes are required so that the challenge is reduced. Now, I would like our discussants to say, where are the challenges? In fact, Mr. Rungta has done a lot of work because he's actually tested the RBI Udgam site and he has tested IEPF as well. So I'm going to start with you.
I think the biggest problem, one, this phrase that you have of reuniting the assets with the rightful owners. I think none of these agencies, whether it is IEPF or whether it is DEF under Udgam or whether the social welfare, social ministry, none of them have this as their primary objective. If you go look at IEPF's annual report, okay, it talks of all the investor protection and investor awareness camps, etc., that they have done. Last report available is 2022. We are sitting in, and I checked just now before coming to the meeting. Last report is of March 22. In the full financial year 21-22, totally 11 crore worth of shares. That's a rounding of number to the 82,000 crores that exists there. That is the amount that has been refunded. So clearly that's not a priority. And one big issue, and I think the primary issue today, apart from the processes, is that there is no search facility there. So I went to Udgam. Now there was a company that I used to run where we had an account. I know that account has gone into the DEF because that was 13, 14, 15 years ago. I have gone and checked. Fortunately, I have the PAN number, I have the exact name. It's not there. It's not there. Maybe the way the company has, the bank has put in the name, maybe there is a dot there, maybe they have put it as PWT dot. I have given the full name as per PAN. I don't know. I don't know why it's not there. It's a small amount, right? Now you multiply this issue. The whole issue is that there are lots of things lying in this black box. Before they show it to you, they want you to tell me how exactly it looks. Tell me how much is its, how will you know? You need to do what Devashish described as a Boolean search, right? Which IEPF used to allow. Again, it seems to have gone back. So I could search for Rungta and it would throw up all the Rungtas there. And I was able to find something that my late father had, and also a few cousins. I was able to pass on that benefit to them. Now I think the issue there with all of them is fraud.
But the search has been now changed?
Sorry?
You can't do that now?
You can't do that now, sir. I tried just now. So now what they have said, you identify who you are. The person who's searching has to identify. So identifying that requires an OTP. I am talking of IEPF, sir. So in IEPF, I went in and put in the PAN, it verified.
Okay.
Then it asked me for a OTP. Now OTP doesn't come and it gets expired. I overcame that. I tried 3, 4, 5 times. I overcame that, went in, right? It allows only 10 searches. Per register, only 10 searches. The first search I did, it says you have run out of search. So
it's a machine problem.
Yeah. So I think, sir, the problem is attitude, distrust. And our whole thing with, and sir, this really requires a change of mind. And this issue, incidentally, is something that is there across. Whether you talk to RBI, whether you talk to SEBI, okay, anybody you talk to, कि somebody will misuse this. My point is the best way to get this number down is to crowdsource the search. Allow people to search. What is the problem? आप दे थोड़े रहे हो उसको पैसा. मतलब वो आके he will do KYC. You have such a difficult process. Let them go through that process. No, पता तो चलने दो उसको कि है.
See, you are at the end of it, you are also doing the equivalent of an affidavit being signed by family members. Virtually like everybody comes together, because they want everybody to say that we have all ceded to this gentleman who is now claiming, or this lady who is claiming it. With the probated will. With the probated will, finally the step says, file this affidavit. With all the people signing to it. Now, then the whole, why was there a probate to start with?
Sir, in my case, for my fathers, these shares that I found, they're not,
You should state that story. So that
so they asked me, they made me run around, and they ultimately asked me, give a ration card in which, his name is there and your name is there. Okay? And I found it. My father was such a meticulous record keeper that I managed to find it. I still have to get the shares. That's still waiting.
So, you have worked in SEBI, and I've been high praise for SEBI and its systems, as well as the fact that they are the first to have an online dispute resolution mechanism. So I always feel that, you may have any amount of technology, but somewhere at the end of it, if there's still a dispute, you need some kind of interface. And you have looked at it closely, and you have experiences. So would you talk about it a bit?
See, now disputes, as far as this, is usually between companies and investors, or between the RTA and investors. SEBI has brought this very nice mechanism, the online dispute resolution mechanism, where they've used the online facility to also bring in arbitration. But capacity building is the issue, really, because we are talking about a rather specialized field which needs a little bit of experience to be able to understand the nuances. And Mr. Rungta raised the issue that there's always this fear of fraud. But from my experience in the regulator and outside, let me tell you, that's a very real fear. Because at the end of the day, I've had very interesting experiences where there used to be these regional stock exchanges, Calcutta Stock Exchange, Madras Stock Exchange. Now, there were some folks who used to go to companies that were listed only there and get share certificates from individuals who really didn't understand the process, and then use that to bring that company onto the, buy those shares off. So they had access to that database and to that list of shareholders. They would buy these shares from these people at a throwaway price, get them listed on the NSE or BSE, and then make a killing. This was a racket going on till SEBI caught hold of it. Now, obviously, fraudsters are going to be one step ahead of the regulator. But making that process a little more streamlined and bringing that dispute resolution, or making the dispute resolution, for heaven's sake, let's take it away from the court system, because it's very overburdened. Very overburdened. We cannot have, small things again bringing it up. An arbitration mechanism, I believe that the stock exchange arbitration mechanism is reasonably good. In fact, when we were in SEBI, we were once discussing that disputes between companies and their shareholders, that should also come within the stock exchange arbitration mechanism. Because Brazil has got a system which does that. We tried to bring that in, but obviously it wouldn't get too much of acceptance here. But if that dispute resolution mechanism is streamlined, I think to a very large extent these issues will go away. And people then will have also a trust in a system that ensures that, again, that's the paradigm, that's the attitude shift. The regulator should try and ensure that the shares or the money or the wealth goes back to its rightful owner. And if that's the emphasis, then you will have less wealth flowing into IEPF and DEF. That's my thought on it.
One of the very interesting things that I heard from, somebody who's very empathetic about this whole process was that, there is nothing positive for the regulator to look at this positively. The reason being, so my argument back to them was that frauds to aaj bhi ho raha hai. So, I mean, this whole database anyway is privately available to a lot of people, and that is being used for fraud. If you allow it in public, then the frauds will actually reduce. Of course, they will not vanish. Frauds will always be there. So his point was, today when frauds are happening, because we have such strict this thing, nobody blames us. But if we make some changes, we make some relaxations, frauds may overall reduce, but whatever frauds happen because of the relaxation will be blamed on the regulator. So I empathize with that. I mean, what is the percentage for the regulator to sort of, simplify this?
I thought you were going to say that the regulators enjoy sitting on a pool of money because they give out ads and they get goodies. But, the issue that you've addressed is, I think, what all of us have said. Distrust and fraud. So when a bank officer says a probate is not good enough, keep the money in the same bank in an FD or get another surety. I mean, if you read the survey part of our report, you will see the most bizarre demands that are made by bank managers. You would be shocked at the kind of torture they have put people through for making claims. So the question that I have is for you, Mr. Kamath, because you've been sitting on several committees and we keep hearing that, fraud hoga. So, and the officer down the line will be blamed. So I think SEBI has bitten the bullet and said, no, we will put SOPs and standard forms in place. It's quite possible that somebody is going to use artificial intelligence, create, certificates and forms that look so genuine that there will be a certain amount of fraud despite everything happening. But if we use fraud as an argument, then the insurance business cannot exist at all because they are supposed to make payouts. So they do two things. One is that for a certain amount, you can have an insurance cover, and with the amount of money that is there in each pool, these regulators themselves can have a base insurance that covers petty issues. And there has to be a process like all insurance companies have, where you investigate a fraud, you take criminal action. You can't harass 100% of the people because of the fear that 2% or 3% might do something fraudulent, because that's inescapable. So do you think that this is a thought that we'll be able to push forward?
Yeah, indeed, yes. I would actually go to the start of this whole life. With technology, I believe most of what we are talking of is already resolvable. We need to make sure that the regulators and all concerned understand that. And some of these things are so obvious, maybe as a nudge in terms of regulation or law. So after you have signed the affidavit and signed an indemnity, even then the worry is that what if there is a fraud? Now that's the reason why you got those affidavits signed. That is the reason why you got the indemnity done. Thereafter, it is between whoever is going to claim and the person that who defrauded or is purportedly defrauded. It has nothing to do with the regulatory agencies. But apparently what happens is amongst the fraudsters then or somebody else, they go against the regulator. Now this is where there has to be clarity that these sort of things will be thrown out at the first step. Now till that happens, everybody is trying to say tomorrow something will happen. May happen, may not happen. So I think this sort of, we go around in circles is what is causing the problem. And this was explained to me very explicitly by Harsh in his own case, that they don't do it because they said tomorrow, we don't know. If you cannot produce that ration card, we don't know who else could have been a claimant.
So, Mr. Kamath, this fear, I think we've discussed this before, that I may be dragged to court. I don't think a regulator can take that stand, right? Because I think I remember telling you that if every doctor who does a postmortem worries that he may have to go and depose in court, he has to. If it's a criminal case, he has to. That doesn't mean he doesn't do a postmortem, right? So if a regulator is sometimes dragged to court because there's a legal dispute, it can't happen in 100% of the cases. It may happen in 1 or 2 out of 100. Then they have to be prepared to go to court, or they just make up the payment. There has to be insurance. But it can't be a reason for harassing people, isn't it?
You're 100% right. What happens is it is not necessarily the regulator, it is the intermediary who then devises his own checks and balances, which have been not mandated. Now, and the common person has no way to determine what is required and what is not required. And that is where I think most attention now is required, to make sure that the regulators implement what they have said is required, is what is asked by the intermediary, whether it's a bank branch or whether it's these KRAs or whoever. Because that's where this problem is today, I think.
Actually, when he said about SEBI being more efficient in this, probably that's because of what we call the SOP penalties. Because SEBI's got these giant penalties that sort of, like built up. So intermediaries, in a way it's good, because intermediaries who are regulated by SEBI, they have these penalty structures where irrespective of what you tell them, you have to justify it later. The penalties start building up. So there are per day penalties, or there are monthly penalties, quarterly penalties. You cannot avoid them. And then you'll have to go and challenge them. So then intermediaries tend to follow deadlines very strictly. For instance, now, applying here, if somebody wants, let's say, a dematerialization or maybe a validation of death or whatever, and you put in a strict deadlines. Now they put it very quantitatively, SEBI. So they say, look, if you don't dispose of this within 30 days, now this penalty will start applying. Now what is your excuse for it? That will be something else. That may be a good danda to ensure that they follow it. That's also there.
But the other good thing that SEBI has done, two good things they have done. Very clearly they have mentioned in this. I think everybody should look at this centralized death claim reporting that SEBI has put in. It's one of a kind world over. It does not exist anywhere else in the world, to the best of my knowledge. They've put in one thing. They said that except for these 2 documents or these 3 documents, you cannot ask for a third document, right? And that also frees the intermediaries, sir, because they say now my regulator has told me that I cannot ask for anything more than this at the risk of penalties. I cannot delay. I cannot ask for these documents. So I think that kind of clarity from the regulator, that when this happens, this is the only thing that you can ask. I mean, this is the only circular I have seen where it says you cannot ask for anything else in so many plain English. One is a death certificate, and that too the first reporting place. You have to give a death certificate. Once that is verified by the intermediary, then they have to depend on that. They don't have to subsequently verify within the securities market. Only within the second is the form. You would need a form. Whatever is their individual forms.
I was told that even subsequent ones, with MF Central, if you upload this form, I don't know whether it's been implemented, but that was the intent. Thereafter, everybody, all the other parties have to automatically act on it.
Yes, sir. That is the centralized death claim. That now so in securities market, just for those who do not know, suppose you have mutual fund holdings and you have a demat holding with a particular demat account a demat DP provider, and you have say mutual funds with 4. In one of them you report. Automatically the KRA will look at which are the other intermediaries that have done for this particular PAN number. It will automatically inform them. Each of those mutual fund have to on their own reach out to the nominees that are there in their records within a certain time frame. I think the time frame is 7 days or 15 days. Within that time frame, they have to reach out with what forms you will need, and that is again, as I said, restricted. This is what you will need, and again when that is submitted, the submission is still needed to be done separately, but once that is done, then again within a certain time frame it has to be acted on. So this kind of clarity, it's really something, it is already being done. So I mean, I think there are about, since 1st January, I believe there are about some 1,000 cases. There are hitches going there from what little I know, but it is working. It's already working.
Just to add to that, see, another very important aspect of that is it's a single window system. As far as the shareholder is concerned, or the claimant is concerned, the legal heir for that matter, that person has to only inform one intermediary and that's it. They don't really get involved later on. So then it goes to the KYC registering authority, and then it follows a process. And that the internal validation process, it's twofold actually. One at the intermediary level and then at the KRA level. And once the KRA level it's done, either if it's incomplete, there's a flag and transactions are not allowed. But once it's complete, then it disseminates to the entire system, and then you don't really have to do anything more. So that is a very efficient and a result of a lot of thought. That's quite good actually, you know.
So Mr. Kamath, you probably have the ear of the RBI and the ministry. This is exactly the point that we have been making to the RBI. Our study will show that every couple of years when the number of complaints mount, there'll be a motherhood statement notification from RBI. Treat nominees well, don't delay, treat people well without coming up with SOPs. We made a presentation to the Kanungo committee. That also stopped short. It doesn't say, you know, what RBI issues has the force of law. You tell IBA to do it and you call it model operating procedures, it has no sanctity whatsoever. And as both of them have said, if you do not complete so-and-so in 7 days, and if you ask anything more than these forms, if you try and increase your number of deposits by telling the claimant, I will not transfer the money to another bank account that you have, you open an FD here and you have to keep the money here. This kind of mischief will stop when there are very clear SOPs, the form is clear, and there is a consequence to the branch manager or whoever is adding these points. Why is it so difficult for us to get this message across to the RBI, and is there some way we can do it?
What I would suggest is we'll have a separate chat on this. If you can put this into something that we could do. I'll first discuss with IBA so that, you know, we have them on our side. Let's see what they have, and then take the next step to do it. Because this particular thing which is so vexatious, where the branch manager says you open an FD or in the same branch and things like that. In today's world, again, digital world, this is an anachronism that he's trying to foist on somebody who's already under his own burden, which it doesn't make any sense.
An unreasonable request. You know, I took a case all the way to the SBI chairman where there was a family, a lady made a will. She has 2 sons, both live in New Zealand. She had divided the property equally between 2 sons. She had 2 bank lockers, her bank accounts, everything was in the will. She forgot about 1 bank locker. Okay? And so the son said there is no other heir, there is no other claimant, rest of it was distributed. This 1 bank locker allow us to open. They didn't even know if there was anything of value. They suspect that a few property documents will be there. So it was an important locker, right? After going all the way to the chairman SBI, they refused to listen, and these 2 were in India for the death rights for a certain number of months. They've gone back, they're going to come 2 years later. So SBI is going to have that locker locked up. It could have re-rented it, but you know, nowhere in the system. And we went from the regional manager, first the branch manager, to the regional manager, then the PRO, because we could do that fight. They did not listen. And if this happens when, you know, people like us in Moneylife are fighting it to this extent, there are thousands and, you know, lakhs of cases because of the lack of SOPs where people are not getting what is rightfully theirs, and so it's dormant, and, you know, it's inactive, then it goes into debt, then it becomes harder. I mean, RBI just has to wake up, and maybe the finance ministry has to tell them, well, this number can't keep increasing. I mean, 1 lakh crore plus is just waiting to get into def in addition to 78,000 crore. That itself is going to be nearly 2 lakh crore, because this doesn't, 1 lakh crore that I'm talking about doesn't include SBI, which is the biggest of them all. I mean, this is not a situation. We'll ultimately probably try filing another PIL. But I find even that is pointless, because then it's tariq pe tariq, that will drag on for another 10 years or 15 years. We're never going to have a solution unless people think with their hearts rather than, just their heads.
But this particular case to me is, as a layperson, I am not even thinking of it as a banker, and we certainly can think on this. Okay, as I know, in the will there is a general thing that anything not mentioned here is fine. And if there are only 2 children, then it was straightforward. That should the bank should have taken notice of that. For some reason, let's assume that one line was missing in the will, then it should go by the Succession Act. And they can say that you provide whatever is required under the Succession Act. So I just can't understand how the bank can refuse to even entertain this.
Sir, on the lockers, if you look at what RBI has laid down in its circular, and I think Mr. Joby will be better able to tell that, but even if there are joint locker holders, my understanding of how the locker regulations work, if there are joint locker holders, one of them dies, right? Then it has to be opened and inventory taken, okay, even though they are joint. So we are not even talking of a nominee now, we are talking of a joint holder. So what do people do, sir? So jugaad, okay, so people don't inform the bank about the death. The second the joint holder goes, he is allowed or she is allowed to go, they go empty out the locker, okay. I mean, what we are doing, sir, is that this has become a complete jugaad economy. The entire succession and the, sir, you are aware of the disability, we have not yet discussed disability. That's become completely jugaad, sir. And the issue, as you know, sir, that it's not a priority for the banks. I mean, or for anybody for that matter, any intermediary, because he is saying, I want to do my business. Okay, and by not doing anything about this, this continues with me, the assets continue with me. Why should I sort of go out of my way and help people unless, Moneylife takes it up, somebody else takes it up? Why should they go out? There is no incentive for them, sir.
And there is no punishment.
And there is no punishment. That could have been, there is no disincentive either, sir.
There should be a penalty. Only then there will be effective.
Which is why SOPs, with a penalty like SEBI has done. Which is exactly why we have such high praise for the fact that SEBI has done it. You have to only these documents and nothing else. I'm just going to ask the panelists if they have any last questions before I open it up to, I know many of you have questions. Anything that you would like to react?
Not really, but just one thing. I mean, we haven't come to that one particular issue. What Mr. Rungta also mentioned about adult guardianship. That's a very important thing, because
they should talk about it.
Because at the end of the day, there are personal experiences and what friends and some people, colleagues have mentioned. An elderly person who is progressively unable to understand things and because of age-related issues. Small thing like signing, I mean, your signature will change. You may not be able to, if you come on a video, my mother had this thing about she had to validate that she was alive for a life certificate. Now, for a little time, she had this, her head would shake. Now, you try to video record a shaking head, it will not accept it. So, my son then held her back, at the back, she held her neck and then he took it. No, why do you have to do all this? It's really not required. It's her wealth. It's her money. It's her hard-earned savings, So, I think an adult guardianship I mean, there has to be a different approach towards how senior citizens and their wealth and how they handle the management of that wealth needs to be looked at. Needs to be looked at very differently. than an ordinary person, because there's a lot of things to be done on that.
So our finding, and the reason why we included this in the study almost towards the end, was this, that a lot of people, I'm sure it applies to most people in this room, that you have adequate savings, you have money in the bank, but if something happens to you, nobody is able to access your bank account. So you may have some cash lying at home. Once you run out of that, to even keep you in hospital, or if you need daycare, in spite of the fact that you have an asset, you're probably living in a 3-bedroom house in a prominent part of Bombay, you have maybe over 1 crore of rupees in various FDs, but because nobody can access it. Now if you have children, they have to go to court, get an order. I believe courts are quite receptive about it, but only siblings, parents, if there is a problem with a child, it usually doesn't happen because the parents have the money. Only siblings and children have been able to go to court and get an order to access in a limited way with regular reporting to an authority that they are using the money for what it's supposed to be, to look after the incapacitated person. Now, I was surprised that when we mentioned this, even the people that we talked to in the legal circles had no idea that not everybody is willing to take care of people. Either you do jugaad, where you're able to access money and you also use it for other things. But if you have a third party, suppose you have no child, then that third party needs to be paid. He needs to be able to have the money to take care of you, go to court, do the reporting, do the accounts. Everything is rupees and paisa at the end of the day. Hiring people, the help doesn't come, you have to keep changing them. It's a lot of time and energy, and there is zero thought to this at all. We are a country which is aging rapidly. We have nuclear families. There are lots of people who are coming and saying that, you know, our children are abroad, I'm living alone, and every day I'm worried what will happen to me if, say, I fall by the roadside, nobody recognizes me, or something happens to me, neighbors will come for a few days. After a while they say, we can't access his bank account. Who's going to go to court on his behalf? Now the rest of the world, the state is very clear that they have a responsibility towards that person. In India, you may have paid taxes at 40%, but we have no concept of social security. We have no concept of the state being responsible for you and acting on your behalf, which is one of the reasons why when we put out this today's event, I had requested people like Sailesh Mishra and Nasreen Rustam Fram that please come and listen to this, because ultimately the legal advice that we had was you will need a separate legislation for this, because it has not been thought about at all. So I'm going to hand it to Mr. Rungta, because I'm sure he knows a lot of examples of jugaad that take care of this, but that's not the answer. You need to have the state thinking about it and providing legal structures for it.
So, I mean, I've had unfortunate personal experience about it. I mean, my father had a stroke and he sort of got bedridden. Also, his cognizance was affected. Excellent record keeper. So, everything was in order. Taking over was no issue at all. Okay. Everything was there, but everything was in his single name. Everything was in single name. So, we did jugaad. I mean, we looked at guardianships and things like that. At that time, I was not that clued on. In fact, that unfortunate incident made me clued on. So, for our clients now, we have power of attorneys, but unlikely they will work if you actually, they are not lasting powers of attorney. So, you would need change in law that will allow those power of attorneys to continue despite the inability or the non-contractual ability. Again, all credit to SEBI, and I think because Pramod Rao is sitting there, we have to give him this credit that in the consultation paper they have spoken about it. Again, it is one regulator which has spoken about it. There are no solutions. It is a complex problem because it is very open to misuse. Okay, all the jugaad is open to misuse. This guardianship that we will do is also open to misuse, and therefore there needs to be checks and balances for the people who are who have a clear mind, clear conscience, for them those checks and balances are annoyances. But those need to be kept there. So it is a complex issue. I think we need to talk about it, and again, all credit to SEBI that they have opened that dialogue, and hopefully, the other regulators will take it up. Again, there, if you see, RBI has a standard system and it is working. The pension, because a lot of government pension comes there, and a lot of pensioners have this problem. So they have worked out a system. In fact, we used part of that system where the officer comes home, it is signed in front of him. So I think they have a system. It needs to be codified so that it can really be something that is available.
Just to add to that, I think it's also the societal structure. Like Sujata correctly mentioned, we are now in a nuclear family era. So we don't have the support of a joint family. On the other hand, transmission of wealth is happening after death, not before death. So earlier it would be the head of the family would then nominate or decide that so and so would now take my place, he would retire, vanvas phase kind of thing. And then that person or those persons will start running with it. We don't have that luxury now because old age needs financing. Old age needs to be funded. So if you have earned X amount of money, 1/3 of X needs to be kept for you to take care of your old age. So you can't give that capital for somebody else to manage, and maybe they are not there to manage in the first place. So that complexity comes in because of that issue. That's my reading of it. Now, what probably can be done is something like nomination. You give a facility for leaving instructions. Maybe I'm just thinking aloud here. That maybe in a demat account or in a trading account or maybe in a bank account, you leave instructions as you would leave a nomination, that in case I am incapacitated and somebody is able to certify my incapacitation, then so and so should be allowed to operate the account for this purpose. Maybe that sort of thing can help out.
I think that will require a lot of checks and balances.
Yes.
So the Kerala High Court has put a list which we have talked about in this. What kind of checks and balances, even when it's a sibling. So maybe some of that will have to be incorporated if this has to work. But like I said, it's a separate and long discussion for a new statute. You agree, Mr. Kamal?
Yeah, absolutely. I think, but this is something that is going to be center stage as we go along. It's adult guardianship or what happens. It is a nuclear family, and this tendency for people who are today young not to have children. I think very quickly is going to maybe 15, 20 years down the line, we are going to have a situation where we will need to, by then, have a workable solution to this.
So I'm going to open it up to questions. Please remain on topic and keep them short, right? Let's start from here.
Mr. Kamal, I'm very happy to see you. I'm an ex-ICICI banker, but I never got to see you when I was in ICICI Bank. Okay, it was a very informative discussion. So one point I want to make, Switzerland has become the richest country in the world, and one of the reasons why it's the richest country, because there's no nomination, and the entire money goes to the government. So I wonder if you're getting inspired by them by any chance, or... And here also, if you see in times when there's no nomination and the money lies unclaimed, after 7 years the money goes to the Investor Protection Trust, then it must be becoming all the more difficult at that point of time to get the money. Like, suppose somebody realizes after 7 years he needs some money and the money gets transferred to the Investor Protection Trust. How do you get the money at that point of time? Can you throw some light on that as well?
That's all part of the report, and that is the torturous process that we were discussing. Okay, so claiming it from IEPF is what most of it was about. I think you missed that, but take a look at the report.
One more thing, what tax implication of inheritance, maybe that could be off the train. Suppose they're inheriting the wealth with this proper nomination. What are the tax implications? How about that?
Off topic.
Off topic,
That's
okay.
not this.
Okay.
Sure, or you can come in front, there's a table here. Chair here. Yeah. Quickly. Yeah. Go ahead, sir, whoever has a mic.
My question is to Mr. Rungta. See, in all this process, where the share transmissions are required to be done, all registers of share transfer, they keep harassing everyone every now and then, one after another, not at one time, one after another. First letter will come, then after 1 month, 2 months, second letter will come, and they keep asking so many documents. Is there any regulation from SEBI or any other regulator about this? Because I have experienced myself.
This is
one,
old.
1 minute,
This
just
is
a minute. My father and my name was in shares as a second name. In spite of that, they do not transmit it.
So I think specific issues we can discuss, but from 1st of January 2024, this new centralized death claim reporting has come, okay? And if you have any issue with any of the RTAs, okay, please use the excellent online dispute resolution. You make a complaint on SEBI scores once, after that take it to ODR, okay, it will get resolved, sir. It is getting resolved. I think it is a different world. Your experience probably is just a little dated, just a little dated.
I think I have a question which is similar to what the previous gentleman had. We structure the document when we send, we write down in number of pages, which are the attachments which we are sending across, along with the forms. What happens is, on receipt, we want acknowledgement.
Which regulator are you talking about, sir?
I'm talking about share transmission, and when we sending it to RTA.
So small point for everybody who has issues with shares, these regulations are extremely new. So in fact, we ourselves didn't have enough feedback. He has some. He's also on committees. So what I would suggest is that since it's so new, I think the experiences that you have are all valid, but they are little dated. I think try again, because now the systems are in place. If your issue is not resolved, try again, and do write to us and tell us if it doesn't work.
No, this is quite recent. In fact, it is this month.
Have you reported the death this month? When did you report this?
No, death happened nearly 7 years back. I got the succession certificate. I sent it about 2 months back, the documents to the RTA. And
then it should be covered by the new regulations.
Yes, it is covered by the new regulations, new forms.
Complain to, use the ODR. Please use the ODR.
Okay.
It is effective.
No.
And I am not saying this, I am not from SEBI, right? So, I mean, my point is, use ODR. We know people who have used it, and I think Moneylife can also.
No, mine is a little different. It's not about the any issue with regard to what they are replying. I'm saying the way they handle it. We sent it through DHL courier. They sent it through a very thin covered this thing, including the shares, and it came in during the rains, and everything is wet. All the.
I think that is a problem you'll find all over India, sir. I mean, that's something else we will need to tackle, but really.
But it's a practical problem. What do I do with the shares now that they are literally more torn than they were originally?
But it's all electronic today, so you can complain and do get in touch with us. We help people. So if it's not resolved, do talk to us, but do complain to SEBI under scores or under ODR.
Okay, I have another problem.
We'll do one at a time. The law.
Yeah, it's a banking problem.
We do one at a time. Okay. Go ahead.
Hello. Is it necessary to probate a will? We are told that if we do not probate it also, it carries equal weight.
So the law in Bombay, if you're in the 3 presidency towns, whether you have property here or you live here, whether it is Bombay, Madras and Calcutta, the law says that you have to probate a will. That costs money, takes time. So everybody will advise you to find various ways so that at least a nominee gets your assets until the whole process happens. But if you're in these 3 places, the law today requires that you need to have a probate, but people understand that it's impractical. So by and large, you can do your distribution without necessarily having it. But what I'm telling you is not the legal way. Legally, you require a probate.
Thank you.
After that.
Correct? Yeah. Yeah, in a joint shareholding, there are 2 joint shareholders and one dies. Who is entitled? Is the survivor entitled to the shares, or the heir is entitled to the shares?
See, now in a joint shareholding, where there are joint shareholders, obviously you will have to go through that process to claim it. Like, the SEBI's process of reporting the death and how that shareholding is transferred to the surviving shareholder. But yes, unless there is some other document, some other will that contradicts this, the survivor should get the shares.
Even if there is a will, here is mentioned that the survivor has the sole right, not the heir in the will.
In the absence of a will. So,
Companies Act.
Correct. So you will get the shares. The survivor is entitled to the shares. But now, for instance, if I am a joint shareholder, and if I leave my shareholding to somebody else, then there may be a question that is there on your title. But otherwise, the survivor gets the shares. That's the normal understanding.
So his survivor can
So
get
I have a request. These are not the issue of unclaimed assets that we discussed today.
Okay.
But we would be happy to answer your questions. We have a legal helpline at Moneylife. If you can send us the issue,
Okay,
we can have an expert reply to it, right?
Thank
May I request that all questions stick to the study and the topic, please? Come. This and then behind.
Thank you. I just want to ask a question. I've been trying to get some shares transmitted after my father died. And after breaking my head, one day a guy pops up to me saying he's an agent who does this for me. He knows my shares are stock, and for 20% of the market value, he'll do this. I'm amazed as to how this person came to know I'm battling to get my shares. Incidentally, the shares are of ICICI Bank. My question is it safe to use these people? Because I've given up hope of getting them.
So I'll answer that quickly. One is, if you go to the IEPF website, the first thing that happens is a pop-up window which says do not go to an agent, okay? But the process, as Mr. Kamath himself will tell you and what he's gone through, it is torture. So I would suggest that they have access, they can scrape data, so a lot of people have access. Second, are there people trustworthy? Yes, I know that there are people who are trustworthy. And many of us are busy. If you ask me personally, I would be willing to pay about 10% because I know how bad the process is today. We are fighting about the process, but it's bad. So I know that people do it for starting from 10%. There are some who even demand 50%. So what you've got at 20 is not too bad depending on the amount. If you think the person is trustworthy and you want to save yourself the time and effort, then I think, I would do it because I know a couple of them who are trustworthy and have actually helped a lot of people get their money back. I'm sure this is not an answer the government wants to hear, but then they better improve the process.
I think the committee, the Supreme Court committee has said that there should be authorized people, just like, for railway we have authorized people, with some kind of a fee schedule, etc. I think the issue this gentleman would face is, one is the percentage, second is they want advance also. So I think this advance problem is a issue, and how to solve it, don't know.
Excuse me, is this about physical shares? Because the demat account should be transferred automatically to the second holder anyway.
No, this is not about physical shares. These are shares that have not been claimed for 7 years.
But if it's in a demat form, the joint person should be getting it automatically, right?
Not necessarily. If there are disputes, it won't happen. It will lie with the company.
May not be aware of it.
There are people who are not even aware of it. You're right. And some are physical. So, the black shirt.
They say where there is a will, there's a way. So my question is, we must have a threshold, say like 5 lakhs or 10 lakhs as an income tax, where the nominee is automatically the default transfer of property. You have now nuclear families, say my children may not be there, the father or mother who is the deceased should get the property. So we should have like 10 lakhs, 5 lakhs, done deal.
So conceptually it's there. I think even the RBI has up to a threshold, they're not supposed to harass you. The banks are not supposed to harass you, and IPF also, as well as SEBI, the process is supposed to be much simpler up to a threshold, and I think it's 5 lakhs. Okay, so below that it's not that difficult, but today most people have property that's valued at higher than 5 lakhs. So maybe that threshold itself has to be improved. Do you agree?
And the other thing is, nomination does not have any threshold. So you can have shares worth crores. If there is a nomination, it will get transferred easily to the nominee. If the nominee is not the legal heir, then that's a separate process. But the transfer happens based on nomination easily.
No, I think,
or should happen easily, theoretically.
I think what he was saying is that the threshold should be for nominations to work. You don't need anything more. You don't need like a will, etc. So I think that's what he was suggesting, that for a threshold you don't ask for a will.
Yeah, good evening. My query is addressed to all of you. See, the nomination rules, which is now incorporated as a part of Banking Regulation Act itself, section 40 ZA to ZF, that automatically absolves a banker from all his responsibilities if he settles the nomination in favor of the nominee. So this is an additional tool which we have, which to emphasize, saying that you put out your standard operating procedure, saying that if you obtain the banker, the fear which the bank staff members carry, can be eliminated by saying that if you obtain as per this itself, which is going to absolve you of any responsibility, if you settle then in favor of the nominee by taking these documents. Additionally, what I feel is, when you are going to place this recommendation before consideration to the authorities, it could strengthen our case, saying that nomination, there is under Banking Regulation Act itself, we have a via media, so therefore why don't you elaborate and say that XYZ documents only are needed, like what SEBI has done? Can this be put across to the...
I'm sure Reserve Bank will look at it carefully, because
they have a legal backup
precedent.
there itself.
It becomes easier for them to look at... yeah. SEBI being the...
Okay, last question. I'm really sorry, there are lots of hands, but one last question.
Sorry.
Whoever has the mic.
Lady.
Okay.
Lady.
Yes, ma'am.
Yeah, so the thing is that, like he said, if you have a nominee and it's the shares, and then you automatically get it if you are the legal heir. But do I have to prove that I'm the legal heir and do a probate?
No. If you are a nominee, no.
If you are, not if you are a nominee.
So if I'm a nominee, I don't have to prove about the legal. I don't have to do the probate. And as Muslims, we are not allowed or not required to do a probate to some. That also comes in, right?
Yeah, we will have to. This is something very specific.
Okay.
So,
all right.
but the point, I think, what we are trying to tell you is that when you have already given a nomination and that nomination is recorded in the system, then you will not need another instrument for the transmission of your shares.
Okay, and
so if you are a joint holder, for instance, once whoever is the other person, you are the survivor, you should get the shares. And the SEBI circulars prescribe the mechanism. So those directives are to the depository which holds your shares, to the registrar and share transfer agent or the RTA which actually does the share transfer, and even to mutual funds wherever they are. So you just have to follow that system and it should transfer.
And I can sell it.
So we have an advocate here who handles this, so she's going to answer it for you. Can we give her the mic, please, Highcliffe?
Good evening, everyone. So there is a section 213 under Indian Succession Act. Muslims are exempted to get the probate, and there is an amendment in the year 2002 wherein Christians are also exempted to get the probate. Now the question is this: after, suppose if there is a will and the kids or the children or the siblings, if they are disputing your will, then even if you are, despite you are a Muslim or Christian, you need to apply a petition for probate before the Honorable Court.
If
there is a challenge, yes. Otherwise, as per section 213, there is exemption for Muslims and Christians to apply the probate.
Thank you so much. So we're going to bring this discussion to a close. I would like to thank my panelists for excellent ideas. Thank you so much. Can you give them a big hand? And I'm now going to request my colleague Yogesh to deliver the vote of thanks. Please wait for a minute.
Thank you all for joining us today. I would like to extend our sincere gratitude to our chief guest, Mr. M.V. Kamath, for gracing us with his presence and for launching this important important report. We are also deeply thankful to Advocate Joby Matthew and Mr. Rs2 for their thoughtful suggestions and insights that enlivened today's discussion. I hope you have enjoyed the discussions and got some ideas about how to process about this asset transmission things. This report would not have been possible without the generous support of Softcell Technologies Global Private Limited under their CSR initiatives, and we are truly grateful for their partnership. All our colleagues at Moneylife have chipped in to help with today's event, and I thank them all. Lastly, I want to thank each and every one of you for your time, interest, and participation. Have a good night.
Thank you.